Good morning and welcome to the Beats Roundtable. I'm Berna Barchet. Today is Friday, October 4th. Our group is here, ready to talk the markets and their best investment ideas. With us today are Jeff Mackey, Ben Gray, David Maris, and Russell Young. It looks like we have a deal in the port strike. So I'm going to start with that news and kick it over to Jeff.
Yeah, slap down the longshoremen. Woohoo! Take the over on Christmas spirit, baby. Happy Christmas. Merry Christmas to all of you. 81 days to go. And I think we're all starting to feel the spirit. I was in Walmart yesterday. They've got their displays up. And we're having a little bit of a giddy party in some of the consumer names today after everything just kind of worked out fine. Stocks we've talked about in the past. Home Depot, that's breaking up. That's coming to new all-time highs. A lot of these companies that were left for dead or just kind of ignored have been forming nice little cup patterns. You see that? That is just a beautiful chart there for Home Depot with a happy little guy. And he should be happy. These stocks were behaving well before we started to get some data that came in looking a little better. And as we talked about, by the time you get data that really supports these building stock, Lowe's, Home Depot, that's up 20% since they reported really crap numbers and took down guidance. That's great price action. Love to see it. We still have some plays kind of in development. Target is working higher this morning on the port strike deal. Now, I don't think that necessarily that was, hugely unexpected, but I do know that these retailers were planning for this strike and just the inevitability or the possibility of it for months. And what that's done is kind of extend the Christmas shopping season. I'm only half kidding about the decorations and things being on display. You see it at Walmart as well. If you look at Best Buy, I think they're going to have a better Christmas than expected. And again, than expected is the super important part there, because you're not going to see huge comps. You're not going to see these great numbers. You're not going to see Best Buy is not a story in full yet. There's not even any point to upgrading your iPhone. But we've got catalysts that are kind of murky out there in the future and undeniable. And at this point, the market is seeing through the other side where we start to remodel our houses again, and maybe we put a nice TV and maybe a 7-foot high jack-o'-lantern to celebrate Halloween. It's going to be just a slightly better than expected Christmas. Does that give us positive comps? I don't know. We don't need them because everyone expects the company like Best Buy to come in with minus 5% comps. A little better than that is going to be good enough for the stock after this much kind of digestion. And you see it in the big companies. You see them in the smaller ones. Friends of the show, stocks that we've talked about quite a bit. Dave & Buster's, that's working higher today. The Build-A-Bear, from Obscureville, from Left for Dead City, that's working higher today. A lot of breakouts. Sometimes Christmas works, Berna. And I think that's your lesson. And I think no one believed in Santa this year. And it only took until October 4th before we stuffed it in the hater's pipe and off we go. So, I'm just kind of celebrating the Friday vibes and getting into the spirit.
Yeah, we also had a decent jobs report today, too, which also helps. I mean,
69,000 jobs added in the food services. So, these are jobs that you can add and subtract pretty quickly, and no one's hiring if they don't have to. So that actually means that people are going out at least a little bit. And, as we digest our behaviors from the post-pandemic world, which we're still doing, and everyone settles in, we're seeing what the baseline traffic levels are and what we should expect from these companies. It's, sometimes the news is just kind of good.
Yeah. Yeah. I mean, are you concerned about the election this month and dragging on sales, or does it really not matter because we're just looking at that, sort of Thanksgiving to Christmas period anyways, making the quarter?
Kind of making the quarter, we priced in a lot of things are bad, and I don't want to get political, not on a Friday, not today. Come on, what are you doing? What are you bringing the hate for? I don't want any haterade. This is the age of noggin pumpkin spice latte. We've got the confluence of holidays all working in our favor, but we really did. The stores, the chains that you see, the reason that they're decorating so early this year is again because they anticipated the port strike. If you lengthen up the holiday selling season just a little bit, it improves your comps. It's going to make for a better Christmas than expected. And we're just working with expectations here. We're not working with kind of absolute values. And it's, going to absolutely be a tiny bit better than expectations, which is good enough for me, man. Let's party.
Yeah. And I think those 2 days that we did have a strike, I think was probably good for the retailers because, as I was telling you offline, Costco was selling out of things again and there were lines places. And so We got a little prepper
The
action.
third-party seller toilet paper market has crashed overnight. If you were hoarding toilet paper and bottled water with the anticipation you were going to flip that stuff on eBay for Christmas, nope, not going to happen this year, baby.
Well,
Jeff, I was at Home Depot last night, and the Halloween decorations and the Christmas trees are out.
Yep.
Slam it. It's all part of the same holiday now. It's just fall holidays.
It starts in August also. It's, it starts about mid-August. It's back to school's over. Well, anyway, thanks for keeping us up on that, Jeff, and nice work getting the Halloween decoration in the frame today.
I like that. That's nice, huh?
Your little skeleton. Yeah, very nice. Okay, I'm going to move on to Ben, who's going to update us on his China trade, which I have to say, a lot of us gave you grief on that, and that worked out like a dream. So very well done on that. But what are you doing now?
So, yeah, I have a kind of a general rule of how I trade, which is that when charts go vertical that I'm long, I decide that's when I exit positions. And so I took I've been selling day by day as this rally is going on, and I've taken about 75% of the position off. And I didn't do it like normal people do, where they just take a little bit of all the different stocks I own. I actually now own very little BABA, 700 HK, which is 10 cent, Baidu and JD. I still own decent positions in Xiaomi and my favorite stock, BYD, the EV company and hybrid company, because I think that they have long-term stories. I think the average U.S. guy comes into the names they know, which is the 10 cents and the Babas and those. And so it's been a good move. I mean, it was a bit of a slog. I started buying Chinese stocks in 22, so it's not like it hasn't been well earned. And so, yeah, there's that. And then there's also an interesting dynamic with one of the things that I kind of scoped out post-Fed was I went short a little bit of the SOFR futures near term, because I thought, you know what, maybe it's a little bit too much. If you look at 2007, we did 50 basis points, but then 25, and the market was at 100, and then they kind of like walked it back to 75, and now we just took a whole cutout this morning, and on the jobs report, as we said, which was, you never know. We have such a history of the negative revisions after the fact, but for today, it's a party, and so not for the bondholders, and so the yen is now back to 149. So you have a little bit of an interesting dynamic in the sense that everybody kind of thought, okay, this is where we're going, the cycle's rolling, and then all of a sudden the economy's a little bit hanging in there. Jeff's saying it's going to be the greatest Christmas ever. The real trick is, what if the bond market sells here? And I kind of have been arguing that for a little while. And then, the yen kind of reverses its track, especially after their new PM said we're not raising rates anymore. And then that would be one danger for China, because one of the things, I came out on here and on Twitter August 2nd, and I said when the Chinese yen or the Chinese yuan versus the yen went down from 22 and change to 20, that was time to get long China, because they both compete for exports, and obviously that worked. And so now we're starting to get a little bit of trace back in that. That's just another reason why I'm selling the Chinese stocks. But you have to be cautious if you're just expecting the cycle to be as it always was, because remember, private credit as a percentage of total debt is nothing like it was in 07 in that period. The government debt is the whole game now, and so they want lower rates, but there's a lot of money out there, and if the economy doesn't collapse, which it's very hard for our economy to collapse when you have the government putting 6 to 8% deficits in, it's like the private sector, as we've all talked about many times, has definitely had a contraction, and is not adding in any way. But it doesn't really matter if the government's just spewing this out. So I kind of come back to the fact that, like, we sit here in a weird spot that's not really like a lot of analogs, unless you go back to like 1973, and that was like a downturn. But then bonds got sold after that. So I'm very wary of the idea that inflation's just beat, as a lot of people seem to be, toting their like victory flags around right now. And then one last item, September 13th, 14th, 15th, I can't remember exactly what date, Ellis, the French linens company, I had recommended that long on here because it sold off from 21 to 18 on the news of Vestas merger, and the market didn't like it at all. And it was kind of like, buy that because I think the merger would have been okay. It's very cheap. And then if they pulled the merger idea, it would bounce back. And this morning we got the headline that the merger's been pulled. There's no more talks, and now the stock's back to 21, and I'll be selling it this morning after the show.
Got it. So great trade on the China stuff. How much of a pullback would you need to see to get interested again? Or was this sort of other than your Boyd and the other core positions, sort of a one and done, or would you be revisiting it on any kind of pullback?
Yeah, I think that it's not as interesting to me because I think that Chinese equity holders are treated very poorly. It's not a place where personal property rights are respected. It's not fixed any of its issues. So this stimulus package they're giving money to poor people. So it's like a PPP type of thing. It's not as much stimulus for commodities and for the general production. But Michael Pettis has consistently argued that what they need to do is change the consumption versus production part of their economy, and they need to focus on consumption. And I'd like to see somehow that they focus on that if I was to be really constructive about things there. They still have a bad demographic profile. But, look, it's cheap, but it's not as cheap as it was. Like Baba and all these. I mean, the Hang Seng was at 9 times when I first started buying this stuff. It was pricing in implosion the way that the S&P was pricing an implosion in 2009 when it got down single digit S&P as well. And there's this saying that the best returns in markets are where you go from absolutely awful to just terrible. And so that's the way I view it. I don't view like China's like all of a sudden back in their heyday or anything. So I would be, and they have a history of these rallies being sharp and then you fade them like that if you look over. So I'm not convinced that this is all of a sudden the golden time to be there. But I think that if it came back 20%, we could revisit it a little bit. But it's 40% over almost all these stocks, and the FXI are all 40% over their 200-day moving average. Seems a little sharp,
Yep, agreed. Well, thanks for that. I'm going to move on to David, who's going to update us on a few things that we've talked about in the past, CVS, GLPs, and whatever else he's got for us today.
Yeah, it's a grab bag on a Friday. But first, Michael Jordan, revolutionary and bad for PBMs. How does that all fit together? So yesterday, Michael Jordan filed an antitrust suit against NASCAR, and the essentially mirrors what the FTC is saying about PBMs, that it's a gatekeeper and it raises prices for everybody. And so Michael Jordan is participating in this kind of revolution in FTC strength. This seems to be with this administration and across a very broad area. And so I said last week that I think that the PBMs are in trouble from this suit. Most people are blowing it off. It's going to take years. Who knows what happens? Again, I do think that they will end up breaking up the PBMs, or at least providing so much transparency that their businesses kind of go away. Because once you have price transparency on a hidden discount business, everyone has to, it's a race to the bottom. Now, following up on that, CVS, which has been a complete dog, like it's operationally one of the worst healthcare companies around. Well, they had an activist come in last week to talk to them. The activist says, I'm not interested in breaking up the company. I had said before that meeting that I think that they'll end up breaking up the company, especially if the stock goes up. It was reported in the newspaper or whatever news wire that they were exploring a potential breakup. The stock's up 10% since that news came out, and I thought that 10% is kind of the magic number, that once you start getting up 10, 15, 20%, the board and the management team has a very difficult time saying, okay, we've decided not to break up, because all of a sudden everyone who owns your stock is facing a drop. And operationally, I don't think things are getting better. So you're not going to be saved by some sort of miraculous quarter. So CVS, while structurally a short that is operationally not going well and is not going to get better, this idea of a breakup, it does make it, I flipped from being short to being long this past week. And I do think that the news that they're going to break up will come out over time. Now, other news that came out this week is that Lilly's GLP-1 is no longer under a shortage by the FDA. They notified the FDA, the FDA notified everyone else, and HIMS was down a lot on that because they make a compounded version of it. And they're allowed to make a compounded version as long as there's a shortage. That all of a sudden led people to believe that they're going to stop making a compounded version now that there's not a shortage. I don't think that's going to happen. They make, if you go on their website, you see that they make a compounded version, semaglutide, which is not the Lilly drug. So they can keep making their compounded drug until Novo's drug becomes off shortage. But even then, they'll just add like vitamin B12 to it or something like that and keep compounding. Separate from that, the company was growing 35% on the top line before adding GLP-1s a quarter ago. So I would not be short going into this quarter. In fact, I'd be long, and I am long going into the quarter because I believe it's going to be a blowout quarter. And sure, everyone's going to focus on GLP-1s, but the numbers are the numbers at the end of the day, and I think that the numbers are pretty fantastic there. Two other quick things. Esta bought it, breast implants, like it. I was going to wait a little while longer. It's a small position. I'll build over the next 2 years. And then lastly, for the committee or for the group, like to know your thoughts on Bungie if you have one. But I own a little bit, and I'm looking at it as a potential long, kind of a very non-consensus long. So with that, I am done.
Question on the compounding. What kind of so there were two reasons people were going for compounding. One was the shortages, and the other was the price differential. How much less are the compounded versus the the Lilly and Novo versions of these drugs?
It depends on what insurance you have, right? Because if you have insurance, it's great. If it's not, it's a couple $1,000s versus maybe a couple $100. I think that the net is actually more like $400. $400. Plus, we don't know how many people go to HIMS and get metformin or get some other drug, not a GLP-1. I think that's actually a pretty big number, but we'll see if they give any color on that in the quarter. But it is a big discount. I think everyone's really going to them for the discount, not because of the shortage.
So once the shortage is over, does that open it up for the pharmaceutical companies to go after these compounders?
Yeah, and they probably will, but they have to run this very delicate balance. They're going to have to really push it as a safety issue, right? Because they don't want to look like they're going after people who are trying to get cheaper medications. But I think there's a legitimate cover for them to do that. So yes, I think that you're going to have this drip of news, this negative news. And that's why PMs are like, I don't need this, great little company that's growing, but I'll own Lilly and sleep well at night. And why own HIMS when the negative news is just going to continue? I'm kind of, I don't disagree with that on theory, but I think that HIMS' 35% growth is just too good to ignore because I just strip out the GLP-1s and it's still a great little business.
Mm-hmm. Mm-hmm. Anyone have?
I say that it's a small position because it is a small company. Just to keep people, giving a sense.
Yep. A more speculative one would say. But so anyone have any thoughts on the Bungie? Not to cold call, but I certainly don't. But anyone looked at that one? Nope. Okay. So not out of this crew. So I'm going to move on to Russell. Russell,
hey,
I think you some of these AI deals.
Yeah, but first I want to start. One of the advantages of this platform is that we can disagree about stocks. And so I know David likes the HIMS. I'm short HIMS, right? And when we look at the information about what was released, is the FDA said that for semaglutide that all the doses except for one are off the shortage list. So the FDA is making it very clear that this shortage is going to be resolved. More importantly, they highlighted the rules about compounding, that you cannot have a knockoff of an existing drug. And so to me, the language was very clear that the FDA is not going to allow these drugs to be on the market. So adding a B12 is not going to be a long-term strategy. And of course, Novo Nordisk is going to sue them. And they reiterate about the safety concerns about doing this. And I know, David, you look at it and say, oh, this is a 35% growth business. But when we look at the churn in this business, the churn is exceedingly high. That,
Okay, what is the churn? Russell, what's the churn then?
The churn's about 60% a year.
Where do you get that? They don't disclose that.
You can look at credit card tracking data that does cohort analysis in terms of what's happening to the customer base. And even the company says
by the way, absolutely, I disagree with that. Absolutely not. You can't find out what their churn is. Yeah, you can't find out what their churn is.
You didn't read the piece that Herb and I put out, but what?
Yes, I did. I've read it very closely, and here's my only point. I've tried to explain this to you before. What is the value of HIMS? GLP-1s, the stock was lower than where it is now before they even mentioned GLP-1s. They were growing really fast, and you're saying is, oh, their churn. Why hasn't that shown up as a problem so far? But no, this coming quarter it's going to show up, or when is it going to show up as a problem?
The stock got a turbo boost because people got excited about the GLP-1s. Well, it did, right? It went from 12 to 20. That's a big pop on the stock, on the GLP-1s. The last quarter, they took down guidance. So the company is slowing, and I think that's the result of the churn. I feel like the churn issue is going to pop up, and it's going to bite us in the next, 3 to 9 months. So I think the churn issue is going to be very evident very soon. At the end of the day, this is still a erectile dysfunction and a hair loss company. And so that's going to be the question is how is the churn? And I'll show you the cohort analysis about when they track credit card payments is that the churn is very high here. And the company doesn't do a good job explaining why it's not.
So and insiders they're growing 35% a year on a non-GLP-1 on erectile dysfunction hair loss business that has a high churn rate that magically in some 1 to 3 quarters is going to hit a problem. But there's no reason. Why is it one quarter and not 3 quarters? Or why is it 3 quarters and not 1?
Have you bought a product off this company? Have you tried these products?
Obviously not.
Yeah. I went online and tried and saw what they were saying. It's largely, they're trying to sell erectile dysfunction and hair loss treatments, right? And people go on.
They're not trying to. They're selling a lot of them.
That's right. They are selling a lot of them, but the churn with these products is very high. And they say they give you a subscription, and then they make it very hard to cancel. And so, it's easy to think that you're going to buy this erectile dysfunction, you're going to be a stud in bed. People try these products, and they realize they're not that effective, and customers churn.
So Viagra is not effective, is what you're saying?
No, I'm saying that people tend to overestimate.
They try these products and they don't. No. You said they try these products and they don't work. These are approved products for the indications that you're talking about. Again, I wouldn't say that they're that effective, but that said, you can't just throw out that they're selling junk things and it's hard to get off of the things. They make it easy. They make it easy for a lot of customers who don't have money to go to a doctor and get drugs that are a lot cheaper. Like we just talk about the benefit. I don't think the management team is great. I don't think like I would use them as my primary care doctor or anything. But that said, they serve a real purpose.
Well, but hold on a second. This isn't an older customer base. The credit card data says this is a younger demographic that's buying erectile dysfunction drugs so that they can, have harder, bigger sex, right? This isn't for people who actually have erectile dysfunction. This is people who want to be super studs. And so I'm just saying that cohort is that you're ordering these drugs, you're ordering way too much of them, and customers turn off.
Just so that you know, and I don't want to belabor it on erectile dysfunction, but if someone doesn't have erectile dysfunction and you give them a Viagra, they don't all of a sudden become superstar lovers. It has no effect to them. So
right.
It's not like
that's what causes my churn.
I don't think young
churn. Well, look, they market their erectile dysfunctions as like special mints. They have this whole, it's targeting a younger demographic. That's going to be the challenge.
It's taking someone who wants a chewable, product versus a non-chewable product. Like Okay, well, whatever. We disagree on it. That's what makes a
That's
market.
fun.
It's not worth it for this much agita for this position.
Yeah,
But
yeah, that's
we'll see how it goes over this next quarter. I
we
I
will.
predict that the stock is higher than where it is today after they report earnings.
Well, obviously you're long. I think it's going to be lower because I'm short. So
I don't even
it'll
have
be
a position in this, and I'm now looking forward to this earnings report more than any other one.
absolutely. It should be good. Um,
Um,
so what I wanted to talk about today is just when we look at the news flow of what's been happening around AI. We had OpenAI just raised $6.5 billion at a $157 billion valuation, and CoreWeave just raised money from Cisco at a $23 billion valuation. And Jensen was saying that the demand for the GB200 is insane. So the money is still very much flowing into AI and flowing into data centers. Next week, I have Applied Digital Access reporting on Wednesday. This is what I'm paying attention to. I feel like we're going to get an announcement about them signing up a hyperscaler, and I'm speculating it's Microsoft. So that's what I'm working on this week, and that's APLD. It's about an $8 stock, 760 this morning, and so I'm paying attention to that. Second, just a quick update on solar, as that was coming up in the presidential debates, is with high electricity rates in California, solar demand is coming back, but the Tesla Powerwall is taking a huge amount of share, and that batteries are now dominating the discussion. So I feel like we're going to see Enphase is still going to be losing shares on the battery storage side. Their microinverters are doing fine, but I am still short Enphase, and I'm neutral on SolarEdge right now. So that's what I'm doing.
Russell,
Yeah.
going back to the AI, because I have a question that I've been meaning to ask you about this. This whole conversion of OpenAI from a nonprofit to a for-profit, and the departures that have also, occurred or right around the same time that this news was announced. Do you think this is going to have any material impact on the company's operations? I think they lost their CTO, and then also, just do you think that this sort of conversion, I don't remember seeing something like this before in the market. Do you think there could be any legal challenges to this?
I mean, no idea, right? We haven't really seen too many companies be nonprofit convert for profit. I mean, and I don't, I don't know. I don't have any opinion on that stuff. I mean, they're very tight with Microsoft, and Microsoft is calling the shots in terms of what they're doing. So I don't know where it's going with the public. What's the investment idea off of if there's challenges, but I mean, it seems like they're doing what they're doing, and investors are comfortable with it if they're putting in more money. So I don't think it's
Yeah,
interfering with the operations of the company.
yeah. That's, I mean, and the executive departures you think are non-material.
I don't know. I don't have a stake in OpenAI, and so I'm sure there's lots of money on the line, and some people are getting big checks, and other people are not. I mean, they're talking about Altman getting 10% stake in the company, and I imagine if you're a CTO and you weren't getting a big paycheck, is that you might be pissed and leave. I can see that. I just don't know. I'm not close to the company.
Mm-hmm. Makes sense. Um, well, I think unless anyone's got anything else, I'm gonna end it here and thank everybody for joining us today. Thanks for joining, and I'm Berna Barchet, and we'll be back on Monday with more stock ideas and market thoughts. Have a good weekend.
Have a great weekend, everybody.
See you guys.